Well, that systemically unimportant, according to the bozos I keep hearing on TV, mainstream, systemically unimportant Deutsche Bank is having some big, big trouble. The same trouble we've been talking about since last year. But I feel like, the trouble's knocking on the door of Deutsche Bank. And you know how the old saying goes, when they tell you there's nothing wrong and there's plenty of liquidity, the bank's fine. When the club, their minions anyways, have to come out and say that, oh, there's no issues here, Deutsche Bank's fine, they're plenty capitalized, everything's good. For them to come out and say that means they have to come out and do the dirty work, which means there's a big problem. Huge. It's going to be huge. It's going to be huge. Anyone in the Tampa area? The Wesley Chapel, Kia, or whatever. It's going to be huge, Carolina. Huge deal. Yeah. The implosion of Deutsche Bank is going to be huge. When they come out to tell you there's nothing wrong, you know the opposite is true. They always do that. And I got a sneaky suspicion we might be in a treat for tomorrow. The club loves to end the week with a bang when they need to do it. And they need to do it. I won't be surprised, won't even be kind of surprised or shocked that a Friday, which is the day you're seeing this video, comes and everything kind of seems okay. Maybe the markets are down a little bit. Maybe there's green shoots. Green shoots, everything's fine actually. We told you Deutsche Bank's fine. Market rally. Deutsche Bank stock rally. Maybe not rally because it's actually doing horrible. But as the end of the day comes by, markets start to close down. Boom, a whopper hits. Something happens, Deutsche Bank, etc. Now over on that side of the world, from what I read, Monday is a bank holiday of some holiday, bank holiday. Banks are closed. So talk about a perfect weekend to have a banking crisis with Deutsche Bank. Friday, let's say the news hits late or whatever. Saturday, no issue because it's Saturday. They're not open. Saturday, Sunday, Monday, they got a free ride there. Tuesday, finally, business is back open. Now what's going to happen? Or nothing of the such shall even happen. Friday comes and goes. Yeah, Deutsche Bank stock still sucks. A little worse, maybe. Nothing happens. Friday, Saturday, Sunday, Monday, banks closed. Yep, banks open too, and it's no different than this week. And I understand Shemitah, Super Shemitah, Blood Moons, Debt Jubilee, but it only matters when they decide to pull the trigger. It only matters then. But I thought October 1st and September 30th, end of the Shemitah, it's now a Jubilee. No. We're also in an election year, as I've said. The club may be holding back until they rig those voting machines to get Hillary Clinton in there. And then once she's in, the votes have been cast and they lie to you and tell you she won, then they can let the markets go. Or maybe they'll be nice to Barack. Barack, you've been doing a lot of work for us, Mr. Obama. We're going to let January come before we really let loose. So we're going to get past, I know we know the fiscal year ends September 30th, but we're going to get to December. Everything's going to be fine. We're going to end 2016 on a good note, and then January is going to come around right before you leave office. That's when we're going to hit it. That's when the economy is going to go bye-bye. The bottom line is we don't know. You remember that movie, some of you? The Never-Ending Story? The big turtle thing? We don't know. JSNIP 4. Are you sure something's going to happen on the 30th or the 1st? JSNIP don't know. So no, seriously though. In all seriousness, something's going to be happening, but it only happens on the club's timing. I just did the video you saw yesterday. The movie Rollover from 1981. the whole scenario of Saudi selling off their treasury assets, their U.S. assets, causing a worldwide stock market collapse. 1981, that movie was done, which goes exactly in line with what Lindsey Williams said they would be doing. Saudi Arabia, funny enough, recently said if you pass that law to allow the people to sue us over 9/11, since the hijackers 15 of 19 were Saudi, we will dump all of the U.S. assets and the treasury bills we have. Well, that's funny. You did that in the 1981 movie that the club was trying to put in our face. And then we had the most recent movie, Money Monster, which I saw the date 9/23, the airplane 777. What's the sevens? Again, I've already went over this, but I'll just briefly do it again. 7 times 7 is a super Shemitah cycle, which happened September 2015. But it lasts a year, which brings us to end of September 2016, which allegedly is a debt jubilee year, coincidentally. So we're going to just sit back and see how this all goes. Am I going to be like, kind of like last year, September and October went by, let's go spend some money, everything's fine. Magic 8 Ball, is that a good idea to write this one off if nothing happens September, October? It is certain. It is certain to write it off. Thanks, Magic 8 Ball. I'm going to go out and just sell all my silver and party like it's 1999 again. So let's take a look. Why these experts, economists, financial people, ECB, European Central Bank, Mario Draghi, everybody's out, IMF, Germany's Merkel. I've been talking about Deutsche Bank. It's fine. It's no sweat. Hold on. Wait a second. Are we sure? Bank run begins now. Deutsche Bank hedge fund clients withdraw excess cash. What? Why? Guys, hedge funds. Did you not hear these people? These are experts. These are heads of state. They said everything's fine. And as a matter of fact, I think they said they were fine before you started pulling the money out. Which means some of you hedge funds, you're not uninformed, you are informed. And you know what that means. When they say everything is fine, you run the opposite way. Oh, come on over. No, plenty of room in Deutsche Bank. It's like one of the Jack's Links beef jerky commercials. Screw it, messing with Sasquatch. Oh, you need a ride? Then they take off and stop again. Hey, sorry, come on in the car, buddy. Okay. They take off again. Hey, Deutsche Bank. Hey, guys. Hedge funds, come on inside. Yeah. Got a big vault. Waterproof, fireproof. Come on in, guys. Then you get a little closer and you start to smell something. It smells like an implosion going on. No. Come a little closer. Come a little closer. That's what Deutsche Bank's trying to say right now. What's that old saying we kept hearing about with John McCain and what was her name from Alaska? She was the governor of Alaska running against them or with John McCain. I don't know why. I can't think of her name. You can't put lipstick on a pig. That's a kind way of saying you can't polish a turd. You can try, but at the end of the day, it's a stinking turd. You can try to say the bank's fine, but at the end of the day, it's in huge trouble. With Deutsche Bank placing new all-time lows, again, their stock, this afternoon, reports indicate the derivatives counterparty bank run is on at Deutsche Bank. The derivatives counterparty run is on at Deutsche Bank, you say, huh? This was originally from Zero Hedge. Deutsche Bank concerns just went to 11. As Bloomberg reports, a number of funds that clear derivatives trades with Deutsche Bank AG have withdrawn some excess cash and positions held at the lender, a sign of counterparties' mounting concerns about doing business with Europe's largest investment bank. When it comes to the old saying, the bigger they are, the harder they fall, it is absolutely spot on when it comes to the banks during this day and age. The bigger they are, the harder they will fall. And you would normally think the bigger a bank, an investment bank is, the better, the most powerful, best off it should be. It should be the best off bank of all banks. You're the biggest one over there. You must be doing something right. But as I've always said, literally from day one when these banks are created, they have to cook the books, the accounting. Oh, we have assets of this amount, liabilities of this, when it's the opposite. You have liabilities of epic proportions, and you have crap for assets, but on paper it's the opposite, and that's all that matters. So you cook the books. That is why the larger the bank, the larger it's going to be, it'll affect us all when it goes down, because they've been cooking the books. And there's a whole lot of cooking to do because these mammoth banks are, they're huge mammoth banks. While the vast majority of Deutsche Bank's more than 200 derivatives clearing clients have made no changes, some funds that use the bank's prime brokerage service have moved part of their listed derivatives holdings to other firms this week, according to an internal bank document seen by Bloomberg News. Millennium Partners, Capula Investment Management, and Rocos Capital Management are among about 10 or so hedge funds that have cut their exposure, said a person familiar with the situation who declined to be identified, talking about confidential client matters. The hedge funds used Deutsche Bank to clear their listed derivatives transactions because they are not members of clearinghouses. These three declined comment when contacted by phone or email. Now, do you know what this sounds identical to? Let's read that first. Let me give you a little hint by reading you the first line again. The hedge funds use Deutsche Bank to clear their listed derivatives transactions because they are not member of clearinghouses, but Deutsche Bank is, right? MF Global, John Corzine. They had to clear through JP Morgan. People used them thinking they were the clearinghouse when in reality they actually weren't. They had to go through JP Morgan. And they imploded. But it's the same principle. You personally are using MF Global, or they were, as your clearinghouse. When in reality, once it blew up, we learned, oh, you're not the actual clearinghouse, or somebody else. Oh, okay. But it's the same thing. We use Deutsche Bank as a clearinghouse. And look how small MF Global was. Can you imagine? Yeah, we're getting away from that. We don't want to use them for their clearing services. We're going to go elsewhere. Could you imagine hearing the same type of story? Well, Deutsche Bank, we kind of took our clients' allocated accounts, like these guys who cleared with us. They have accounts on hand, allocated. We're not supposed to touch them. But with all these lawsuits and all this stuff going on lately, we didn't raise as much capital as we told you we thought we did. We've been kind of pulling out of there, throwing a Hail Mary in the markets, hoping we'd get something and make some big money so we can deal with these lawsuits. And we failed. And it's MF Global times 50 million. Sorry about that. I mean, you could see this coming easily. Something of that nature. Having said that, it doesn't even matter if it doesn't go that way at all. Why is that? Because Deutsche Bank itself is in the tens of trillions in derivatives it has on its own books. So it doesn't matter if they're hedge funds, people using them or not. It means nothing. You guys are attached to a gigantic, enormous boat anchor. And when that baby goes over, it won't matter if you, 3 or 4 or 5, 10 of you got off of the boat, so to speak, when that thing goes over. It's taking the whole ship down. Quote, our trading clients are amongst the world's most sophisticated investors, Michael Golden, a spokesman for Deutsche Bank, said in an emailed statement. We are confident that the vast majority of them have a full understanding of our stable financial position, the current macroeconomic environment, the litigation process in the U.S., and the process we're making with our strategy. Yes, Mr. Golden, you're correct. Looks like a few hedge funds are quite well aware of your strategy. And it stinks to high heaven, so they're out. Like the Shark Tanks. And for that reason, I'm out. Clients review their exposure to counterparties to avoid situations like 2008, the collapse of Lehman Brothers Holdings, Inc., and MF Global's 2011 bankruptcy, when hedge funds had billions of dollars of assets frozen until the resolution of lengthy legal proceedings. As expected, Deutsche Bank stock in New York is sliding pretty heavily. If the most sophisticated professionals in the world are withdrawing cash, why are German depositors, those sheeple, leaving their life savings at risk ahead of a long weekend in Germany? Monday is that bank holiday. So I'm going to print this chart. Oh, not print it. I'm going to show it. Show it live. This is the systemic risk chart in Deutsche Bank's in the middle. So who would be directly affected from Deutsche Bank going under with their derivatives? Tell me if you heard of any of these names. Mitsubishi, JP Morgan, Bank of New York Mellon, Goldman Sachs, Bank of America, Morgan Stanley, Citigroup, maybe not State Street, Wells Fargo. Heard about them recently, haven't we? HSBC, Barclays, RBS, Credit Suisse, Commerce Bank, UniCredit, BNP Paribas, Credit Agricole, Societe Generale, Santander, remember those guys, Bank of China, ICBC, China Construction Bank, Sumitomo, and Mizuho, which I haven't heard of that, a few of those. The bigger the little dot on this chart, the worst off. And I don't know who ICBC is, but they're kind of large, if I'm looking at this right. But if you just look at the outer little circle, these are all the ones that are really heavily affected by a Deutsche Bank collapse. This is the thing when I say, and not just me, a lot of people have been saying this. These derivatives imploding at one big bank will cause a daisy chain effect to all the rest. So here's another example I'm going to give you. I'm going to look at these outer banks, all these large ones in the outer ring. Okay? Deutsche Bank goes down. Let's just focus on the outer ring. Deutsche Bank goes down, derivatives, problems, nightmares. That's okay. All these ones on the outside are affected, but they have what is known as a credit default swap with each other, essentially. And a credit default swap is essentially insurance on a financial asset such as a derivative product going belly up, causing financial mass destruction. We're covered. We got, AI. Remember AIG? AIG was that insure type of thing, right? So that's okay. HSBC has Barclays covered. And RBS, Barclays has RBS covered. RBS has Credit Suisse covered. BNP Paribas, right? Daisy chain. So this one says, we just failed Deutsche Bank. We were exposed to their derivatives. We need to go to the insurance company. The insurance company happens to be Citigroup, Wells Fargo, Bank of America, JP Morgan. They all insure each other of the same crap. And they say, well, how much do you need? What kind of damage are we talking? Oh, not that much. Couple $1 trillion, I'm sorry, say that again. A couple $1 trillion, and this is just the beginning. Okay, we don't have that money. Now we're in default. JP Morgan. Hey, JP Morgan. Hey, Bank of America. It's JP Morgan. Listen, need to make good on some of those credit default swaps. Deutsche Bank just went down, took down HSBC. HSBC called JP Morgan. They're taken down. JP Morgan just called Bank of America. I'm calling you now. We need to make good on these credit default swaps. How much do you need? Well, the going rate at this particular moment for what they're needing is about $2 trillion. But then, as those phone calls are being made, other people are making those same calls. Daisy chain reaction. So I think when we keep hearing little whispers from the elite that this is the year of debt jubilee, this chart you see, there'll be a debt jubilee, all right, for those guys. All that massive derivative debt, it'll be just, I don't know what they'll do with it, how they're going to handle it, but there'll be a debt jubilee for sure. And as I said before numerous times, you owe a credit card? You have a car payment? Oh, you have a house payment? Mortgage? Yeah, listen. Debt jubilee isn't for you little people. You little people, you consumers, you taxpayers, peasants, citizens. We used to call you that. We don't call you that anymore. You're a consumer. You're going to have to pay those credit cards. Sorry about this. You don't get a debt jubilee. We get a debt jubilee. Why? Because it's our system. But we have a great credit rating. Not anymore. Why not? Because it's also our system. We rate you. Imagine if you could rate the banks. And you rate these banks, Deutsche Bank, your credit is so bad based off of everything that we've been following you over the years for. JP Morgan, Goldman Sachs, settle out of court, pay the fine. Your credit rating is below 500. Because of that, you now have to give me a credit card with extremely low interest rate on it. Matter of fact, you're going to give me a credit card and you're going to owe me interest on it. You're going to pay me to use it. Negative interest rates, I'm putting them on you, sucker. They would be laughing their butts off because that'll never happen. So anyways, debt jubilee for them, not even kind of debt jubilee for you. So another article from Silver Doctors regarding the same thing. Same day, Thursday, this is posted. This is Thursday night, I'm doing this video. Panic as margin calls begin. Whoa, wait a second. What is this? Deutsche Bank has financial system on the cusp of collapse, according to PN Precious Metal Fund Manager Dave Kranzler. Let's see what he has to say. Deutsche Bank stock is now in full panic sell-off as I write this. And just to be fair, Deutsche Bank stock price, just $11.48. It went down 6.67%. 6.5% today it dropped. Ooh, that is incorrect. Deutsche Bank stock is now in a full panic sell-off as I write this. It just hit another new all-time high, New York Stock Exchange low, brought on by the heaviest volume ever in the stock since its 2001 New York Stock Exchange listing. So you're telling me Thursday, the heaviest volume, naturally selling, ever. That means even in 2008 when we had the crisis, it wasn't being sold off like it is now. As I said, now you know why the minions came out. Oh, the financial experts, I'm the prime minister, I'm the ECB bank spokesperson. Deutsche Bank's fine, don't sweat it. Which then means what? We now know every time you guys talk, because when Deutsche Bank goes down, you guys said it was fine. You've just confirmed, what we already knew for the 10th time. You're freaking liars. You've also let us know whenever you lie, we do the opposite, so thanks. It's currently down almost 10%. No doubt the central banks will try to bounce it. Deutsche Bank may well be the scapegoat this time around, just like Lehman was the scapegoat in 2008. Central banks in collusion can prevent just one bank from collapsing. It was the co-collapsing of AIG and Goldman Sachs that prompted then Secretary of Treasury, which is also an ex-Goldman CEO, Henry Paulson, or Hank Paulson, to put in motion the bailout of the U.S. and European banking system. Yesterday, it was reported that the rate the Fed charges the banks to borrow collateral surged to its highest rate in, speaking of the powerful number 7 years. The rush to borrow collateral was no doubt prompted by the over-the-counter derivatives related counterparty collateral calls. A collateral call is like a margin call in a stock account. This occurs when a derivatives trade goes south for an entity that is on the long side of the derivatives bet. a bet that Deutsche Bank won't default, for instance, and the counterparty to that trade demands more collateral to be posted in order to ensure that the bet can be paid off if the long side actually loses. Now multiply that concept across thousands of derivatives trades involving hundreds of hedge fund and bank counterparties totaling hundreds of trillions of dollars. It does not take too many collateral calls before counterparties and central banks run out of collateral that can be posted against these over-the-counter derivatives margin calls. That's happening right now. So essentially what this is very similar to, if you guys remember, do you remember when silver was going up, right? 20 bucks, 25, 30, 35, 40, oh my God. Got to 50 practically, 49 and some change. Got to 50 bucks. And then all of a sudden, on a Friday, right, late Friday, markets are closing, the CME group, who runs the commodities markets, announcement, Monday morning, when the markets open, we need a lot more what they call maintenance fee for anyone that has any open positions for precious metals, in this case, silver. Any silver contracts that are open Monday morning, you need to put, and it's a percentage of more money into your account, or else you're going to have to close off, you're going to have to sell the account. You're going to have to close it off because you won't be able to meet the margin requirements. Therefore, you got to sell off the order. Everybody and their mother knows Monday's now going to be a bloodbath because, and I've explained this before, by the way, when Monday comes, the second you can trade, you're going to liquidate your account. Even if you thought for some reason, I think I'm just going to hold my position or keep it open. There's going to be a stampede of other people, and there's going to be some big players in there, of course, who decide, oh, I don't want to come up with extra margin fee. It's going to cost me thousands just to maintain my position. Pfft, I'm selling this thing off. No way. And if you're the bozo that held on to it, you just got stampeded. As you saw what happened, 49, 45, 44, 43. Oh my God, they smashed it. And then maybe the next week, I remember there's a couple times where it was like the next day or 2 days later. Oh, we're doing it again. We're raising margin requirements again. Margin requirement hike again. What? This is criminal. Well, we reserve the right to keep markets stable. We need to make sure there's enough money that if it moves too much, the counterparty, you can pay. You have the money in your account if it goes the other way. That's why we have to raise margin requirements. That's what they said. Well, that's funny. You're not doing it when the price goes down. The same can happen. The same can happen. Of course it can happen because the price is going down. But when the price starts going higher and higher, you're doing it? That doesn't make sense. People want the price to go higher so they can sell the contract and make money. Oh, but there are people who hold short positions too. We got to look out for them. And okay. So what I'm seeing here is the same thing, except not commodities, in this case silver. We're talking about derivatives, but it's the same reason. We need you to put a little more money in that account to maintain, because if the other side of this bet goes, if this bet goes the wrong way for you, the other side, got to make sure you got the money to pay. So now the collateral needed to play with these derivatives just went up for everybody who's got one of these. So when he says in this article, what was the title again? Panic as margin calls begin. I'm going to say that might be a big 10-4. Like I said, now multiply that concept across thousands of derivative trades involving hundreds of hedge funds and bank counterparties, totaling hundreds of trillions of dollars. Does not take too many collateral calls before counterparties and central banks run out of collateral that can be posted against these over-the-counter derivatives margin calls. Unless there's a huge bailout. But as Angela Merkel said, there's not going to be a bailout. It's not going to happen. Oh, so we got to do a bail-in. Ooh, what was that other statement he said? Why are the sheeple leaving their money in this behemoth bank right now? Exactly. That's happening right now, he says. This is 2008. Redo. Only this time, the damage inflicted by derivatives counterparties collapsing will be much worse because the size and scale of the problem is massive. Deutsche Bank is at the center of focus, but there's no question that U.S. too big to fails are in similar financial condition. If that's not the case, then why won't the Fed unwind the whole quantitative easing that created the $2.3 trillion in bank excess reserves sitting at the Fed? Pull this rug out from under Goldman, JP Morgan, Wells Fargo, Bank of America, etc., and the entire U.S. banking system will collapse. But that will happen at some point unless the Fed cranks up the printing press again. And this time, if they do crank up the printing press again, 2008, $800 billion TARP fund with the stealth trillions by the Federal Reserve also in there, that's nothing. That's nothing. That just made this bubble that much bigger, which means the bailout, if they were to do another one, would be even that much bigger. But if they tried to do it again, the guys were too big to fail. We said it last time. They're still too big to fail. We got to do it again. Wait, we told you to break those banks up before. You said no, it was fine. We will not be standing for another one of these. The people of the world will not be standing for another bailout. When everyone's going to say, what about me? I'm struggling. I've had trouble. There's been no recovery. You say there is, but there's not. What about me? Well, we're going to take from you and your kids and your kids' kids and your kids' kids' kids and your kids' 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 kids. Because we got to bail out the banks again. Again, I think this is time, as I said, debt jubilee year. I think that's the goal. Not gigantic, enormous bailouts. Deutsche Bank may be the catalyst that throws a spark that ignites the fuse on hundreds of trillions of financial weapons of mass destruction, as again, they're called derivatives. It was just reported that Deutsche Bank's hedge fund clients are rushing to draw all excess cash at the bank. That's how the run begins. Deutsche Bank stock is down 8% right now on 33 million shares. This is 3 times the 10-day average trading volume and over 6 times the 90-day average, with 2 hours left in the trading day. It's as if someone turned on the light in the kitchen and the cockroaches are running for cover. Make no mistake, Deutsche Bank is not the only big bank in trouble right now. I have no doubt the phone wires between the U.S. and European too big to fails are sizzling. This is also the reason the manipulators have been throwing a scorched earth attempt to push gold and silver lower. Again, this is just like 2008 when the manipulators took the price of gold down from $1,020 to $700 or $1,020 to $700 right before the entire banking system de facto collapsed. Deutsche Bank may well be the canary, but the coal mine is the banking system, European and U.S., and there will be plenty of dead birds before this is over. Fantastic article. Can you imagine if $1,330 gold right now is the lowest they got it in $19.16, we'll call it $19 silver, is the low. Remember, they smashed silver down to, it was actually high 9s extremely briefly, then it went to $10 from like $20. So if $20 right now, or 19, is that's the lowest they got it, and that's it, where's it going to go next? Now, I will still say, if this type of thing happens, it'll give them a good excuse to dump everything. Because everyone's going to be scared. If all these people are scrambling to get the excess money, right, to make their bets good, margin call, so to speak, they're selling off other assets that they may have had. And what if they had a bunch of gold and silver contracts? Oh, we got to sell them all in a hurry, all of us together. My opinion is that, well, today's Thursday. This has been happening for the last couple of days, especially today. Why is silver at $19.16 and why is gold at $1,325? If they were liquidating all that stuff, there would have been a smashing of those prices. So, doesn't mean they can or they're waiting to do it, the club. I'm not going to be shocked if I saw them smash it again and I saw, oh my God, silver's down to $10 again. Do you think I would get on here and be like, this is painful, guys. I got to tell you, all the silver that we've all accumulated over these years. Now it's back to $10, man. I guess these guys can just keep slamming it, and maybe we should just throw in the towel. Are you kidding me? I would do a video dedicated to the club. Club? My name is Jason Four. You may have heard of me. Probably not. I want to sincerely take the time out to thank you. To really, truly thank you. Because I accumulated all the silver I thought I wanted. But now that you smashed the price down that low and you did a number on gold too, I think it's time for me to buy a little bit of gold. And I, like you, love a fire sale. So I want to thank you for giving me this opportunity. I didn't think I'd have another one. Matter of fact, I was sure I wouldn't have another one. You just proved me wrong, and I want to thank you. Because now that the price is going after this, ooh. Again, thanks. P.S. Jason 4. Good job. That's how that would go. So Friday, you're seeing this video. Can't wait to see if anything interesting happens. Tell you the truth, we shall see. Take care.